Hi, guys. Happy Monday or Sunday night or Tuesday, whatever day you're opening it. I hope it's a really good day. So it's Sunday night here where I'm at and what I'm doing. So today was Mother's Day. So it was awesome to celebrate with the two boys and Kike. They made me a little like flower pot to grow or like a little thing that there's little pots hanging. So I can grow some herbs this spring and summer. So I'm pretty excited. And then there's like handprints and footprints on it from the boys. So it was super special. Homemade gifts are the best. So this week we're going to talk about insurance part two. I'm pretty excited because we're talking about health insurance. And so health insurance is just so important to have a basic understanding of because at some point in your life, you guys should all know some basic information, like I just said, because you guys need health insurance. We don't live in a nation where health insurance is provided by the government. And so for everybody, we're actually one of the last first world countries that do not provide national health care coverage. And so we've heard a lot about it when it comes to elections and who's sitting in office and what they want to accomplish. And more recently, with Obamacare, it just required that everybody had to have health insurance. It didn't like provide a health insurance option for anybody. So when the current administration, the Trump administration came in, they undid that. And so in 2017, 9.1% of the population was uninsured, meaning only 9.1% of people did not have insurance. In 2018, the last time that number was really measured, it had jumped to 11%. So it should be interesting to see where that goes and what that looks like. Right now, with what's going on, a lot of people are losing health insurance because when you lose your job and you have your insurance through your employer, there's a couple things that happen, but some people lose that health insurance. So my sister who works for a pharmaceutical benefits company, like when they send you your prescription in the mail, they're kind of anticipating some really big loss as far as what their profits and revenue are because people will just lose their insurance and then they'll lose the ability to afford some of the specialty drugs that get shipped home to them. So that's why it's all like super important to understand this. So we'll get started. I'm assuming Miss Sickles just kind of went through the PowerPoint slides with you and then watched the videos. Tried to point out where what was to go in your guided notes. So remember to use those guided notes. I think, let me see, forgot to pull that over here so I can try to tell you when you should be doing stuff. So, okay, first question, why do you think you need health insurance? You guys should answer this. Even though we think we're going to be super healthy and stuff, we never know. And remember, that's what insurance is. It's all about that risk that you're taking that something could happen to you. So with health insurance, even though we are super healthy people, we're like betting against that possibility that something could happen. The next question has to do with watching a video and then answering multiple choice questions. So I think we'll get there in a couple slides. So here we go. Here's our objectives for understanding health insurance 101. We want to understand the importance of having health insurance, identify the various costs affiliated with having health insurance. We'll explain how health insurance works and the different types of plans available. Understand how government healthcare programs like Medicaid and CHIP work and who qualifies for them. And then lastly, we'll explore steps that you can take in order to lower your medical costs. So something to think about if you were watching this in the present mode. I won't give you the answer right here, but this is a big reason why you need health insurance. So what percentage of children under the age of 18 visit the ER? So 18%. So that's pretty high. Growing up, we joked that we were just a very accident-prone family. And so it was just assumed that each of us, I had two younger sisters, we would each visit the ER at least once a year. And we pretty much did. So just kind of always on the go, always out doing stuff. My sisters are very active in sports. I just had a lot of random stuff happen to me. Like when there was a 1% to 2% odd chance of things happening, I was doing that. So I played the odds, but you just never know. And then that's not even thinking about other things that come up. So that's just going to the emergency room. All right. Why do you need health insurance? So health insurance is all about weighing the risks that something could happen to you. Preventative care helps lessen the risk. So when you guys have to go in to get your physicals once a year, that's a preventative care thing. When we get shots and we get vaccinations, that's preventative care to make sure that we don't get some of those illnesses out there. So I hope that everybody gets the flu shot. That's all I have to say about that. And then you need health insurance because a serious illness, accident, or ongoing health issue can add costs quickly without health insurance. So usually I link any pictures that are in there, links to some really cool infographic or links to an article. So this one here is talking about how much does a hospital stay cost. So this is actually pretty cool because it's going to show us how much it costs. And then this is with insurance versus uninsured. So if you have somebody who is uninsured versus someone who's insured, here's how much things would cost and the difference and why we need health insurance, unfortunately. So one thing that I'll point out is this pregnancy and delivery, being that is something that I have a lot of experience with lately. So this is right on track. So normal pregnancy and delivery, without the pregnancy part, just the delivery part, we just got our bill in the mail the other day. It would have cost $18,000 just to deliver Leo. So pretty crazy. But because of insurance, we paid $2,050 and that's it. That included everything from the doctors coming to help me, the doctors coming to examine Leo, my epidural, my hospital stay, Leo's hospital stay. So it all adds up. I can tell you right now, we would not have been able to afford an $18,000 hospital bill. And then that does not include you guys. I think this is from 2013, so that's why the numbers are a little bit skewed. But you go to the doctor a lot when you're pregnant. So for the first 20 weeks, you go to the doctor every 4 weeks. And then after 20 weeks, you go every 2 weeks. And then when you have about 10 weeks, I think it's about 10 weeks left, you go every week. So and every time you see the doctor, it's minimum of $250 just for the doctor to come in and see you. So it adds up pretty quick. You can look at something like even just having a headache to go into the doctor and have everything looked at and examined, $17,000, almost $18,000 versus maybe $1,000 to kind of figure out what's going on and what tests they have to run and stuff. So pretty crazy in terms of what you would pay without insurance versus having insurance. So as you guys get older, we'll talk about this, about how long you can stay in your parents' insurance. I highly recommend that most of you do if you can. And you have until you're 26 years old too. And you used to have to be in school, but that's no longer the rule. So you just never know, even though if you're super healthy, that if something comes up, like you sprain your ankle when you're walking down the street, $24,000 versus maybe $1,500, you probably want to go with that insurance rate. All right, so next we're going to just watch this little video about health insurance explained. I think we're going to watch it. Here we go. Yep, nope, we're watching it.
Millions of us now have health insurance under the Affordable Care Act, or what some people call Obamacare. But like many things in life, your health insurance can often be confusing and complicated. Whether you've been insured for years or you're new to the game, understanding your policy is important to your health and your wallet. First things first, you have to pay your premium every month or your insurance could get canceled, kind of like your cable subscription. You can also think of it like a shared healthcare piggy bank. We all chip in each month, even if we're healthy, so the money is there when we need it. If you get insurance at work, your employer probably pays most of your premium, and the rest comes out of your paycheck automatically. If you have Medicaid, you most likely don't have to pay any premium at all. The federal government and your state take care of that. If you're insured through a new health insurance marketplace, depending on your income, you may be eligible for a tax credit that pays a portion of your premium. Once you have that shiny new insurance card, you'll want to try really hard to keep it in your wallet. To better your odds of staying healthy, be sure to take advantage of the free preventive services that all new insurance plans provide. But of course, stuff happens, and that's when insurance really comes in handy. Now, having insurance helps a lot, but it doesn't mean all your health care is going to be free. There are lots of details about your insurance plan that affect how much you pay when you get sick or injured. If you have Medicaid, a lot of these services could very well be free. Otherwise, you'll likely have to pay something when you go to the doctor or fill a prescription. This is called a copay when it's a specific dollar amount, like $25 per visit, or coinsurance if it's a percentage of the bill. There's also the deductible. That's how much comes out of your own pocket before your insurance starts paying. Depending on your plan, you might have a deductible for all your care, or it might only apply to some types of care, like hospital stays and prescriptions. So read your plan material, because it could add up to thousands of dollars. Another important part of your plan is the out-of-pocket maximum. This is the most you'll ever have to pay in any 1 year, at least for the benefits your plan covers. Your insurer will pay 100% of anything beyond the maximum for the rest of the year. It can be just as confusing dealing with prescriptions. Your plan has a list of drugs it will pay for called a formulary, but the prices vary. Check with your doctor or pharmacist because a generic drug might fix you up the same as a brand name drug, but the price difference could be huge. So, those are the costs typically involved. But remember that they'll be affected by your insurance plan's provider network. This is a list of doctors and hospitals that are connected to your plan. The insurance companies negotiate discounts with these providers. Stay in network and the discounts get passed to you. Go out of network and you could end up paying full price. And remember that out-of-pocket limit? It won't work if you go out of network. In some plans like HMOs or EPOs, your insurance would pay nothing if you go out of network. In other plans, like PPOs, your insurance will cover you no matter where you go, but you'll pay a lot more if you go out of network. Also, if you want to visit a specialist like an orthopedist, some plans require a referral from your primary care doctor. Sound easy enough? Well, sometimes staying in network can be tricky. In a hospital, it's possible that your surgeon could be in network while your anesthesiologist is not. If this happens to you, don't be afraid to negotiate with your provider or file an appeal with your insurer. So as you can see, there's a lot to think about when you choose an insurance plan each year. Some plans may have low premiums, but fewer doctors or hospitals and high deductibles. There are trade-offs, and understanding and choosing among plans isn't always easy. Remember, if you have questions, call your health plan and ask, or check with your hospital or doctor. If you still have questions, your state insurance department or consumer assistance program can help. With the Affordable Care Act, there's new support for consumers, so take advantage of it. Having health insurance protection is a good thing, especially when you know how it works. We hope you're now better prepared for the next time you have to pull that insurance card out of your wallet. Stay safe, America.
All right, so there's lots of really good vocab in that video, and it's overwhelming. So I will tell you too, like right now we're having open enrollment at the school. So this means this is our time for us to sign up for insurance. And a lot of the adults, a lot of the other teachers in our building are super confused about stuff. So it happens a lot. And that's why you guys are just better off if you can understand this stuff now and get ahead of the curve and just really understand some of that basic vocabulary. So go back, watch that again. Make sure you answer. These are where those questions are coming from. So there's multiple choice. So go back and watch that video in order to be able to answer those things. So, all right, I think there's 2 questions on it. So this is about what is Medicaid and CHIP coverage. So this is another video. We'll watch it and then I'll go through some of this stuff because this will just kind of reiterate what we're going to see in the video. But it's another really good video that I think breaks it down really easily, because I get so into it that sometimes I over explain it. So we'll watch the video and then we'll go through those things really quick.
So, you have some questions about Medicaid? You're not alone, and you've come to the right place. Follow along. We'll cover the basics and have you on your way in no time. Medicaid is health insurance that you get from the government. It's great coverage for people who may have low income or certain health conditions. Eligibility can vary by income, household size, and citizenship status depending on your state. So that's who may be covered. Now let's talk about what may be covered for low-income individuals, families, and children. Most Medicaid plans let you pick your own primary care provider, or PCP. Your PCP is the main healthcare professional that takes care of you. Medicaid plans offer a lot of help to stay healthy. Your plan may offer preventive care services, as well as coverage for medications, most at little or no cost to you. Depending on your plan, your Medicaid coverage may also include extra care and services. If you think you might be eligible for Medicaid and you'd like to get started, here's what you can do. First, learn the details about your state's Medicaid program. Medicaid varies from state to state. Some states even call it something other than Medicaid. So find your state's program online or visit an office in person. If you're eligible, you can then sign up online, by phone, or in person. Keep in mind that once you join, many states will want you to sign up again. Some states call this process redetermination or recertification, which are just big words for re-enroll. So it's a good idea to be on the lookout for instructions from your state on what you need to do to keep your coverage in place. Your health plan may also contact you when it's time to renew your coverage.
All right, so we definitely fell into our state calling it a different name, which I think we go through in the next slide or so. Oops. All right, let's talk about, here we go. All right, so we do have, so we call it MNsure here in Minnesota. But when they talk about the CHIP program, so that is Children's Health Insurance Program. That's what CHIP stands for. So CHIP provides low-cost health care coverage to children and families that earn too much money to qualify for Medicaid. So Medicaid is the one that the government says, oh, your income is at this level, or you have certain indication or certain things that are going on with you health-wise, or disabilities, or age. So then you would qualify for Medicaid. But sometimes if you can't afford insurance and you make too much for that Medicaid threshold, you can your children can at least qualify for CHIP. So if you make too much money for Medicaid, CHIP is an option for you for some. So you can also, it also covers pregnant women. So like when I got pregnant with Leo, I automatically would be able to go in on a CHIP program. So in order to enroll, you call or fill out an application online, and then this covers all your routine checkups, your shots, your doctor visits, prescriptions, dental and vision care. And then if you have to go to the hospital for anything, it will cover both inpatient and outpatient. And then labs, x-rays, or going to the emergency room. So your costs for well child and dental, it's free. So that means, remember again, that well child is like anytime you come in for routine visits. So for Leo right now, it's a lot. We go 2 months, 4 months, 6 months, 9 months, a year. And then after you're a year old, it's every 6 months until I think you're like 4. And then you go every year after that. So, and then as an adult, I can go every year for a well check too. And then there's certain things that you do every so often in order to stay in that preventative care. There might be some co-payments for any other services that you might need. And then some states charge monthly premiums, but you don't have to pay for sure. They cap it at, if you have to pay that premium, they cap it at 5% of the family's income for the year. So some money saving tips if you can't afford healthcare. So there's a high deductible plan. So the laws changed a lot surrounding healthcare with the Obama administration. And one of the big things that they did is they allowed you guys to stay on your insurance with your parents until you're 26 years old. So prior to that, like when I was in college, you had to be in school in order to stay on your parents, and then you could only stay on until I believe you were like 22 or 24. So I had to get my own insurance pretty fast. And what I did was I got a high deductible plan. So this meant like I was pretty healthy for the few years that I had in the last few years that I had insurance with my mom's plan. And then they call it a catastrophic event. So that means like I'm pretty healthy. So I only need insurance if something really bad happens. So a high deductible, remember that deductible term that you guys learned about the other week. This means like you have to pay that much of it before your insurance kicks in. So a high deductible means like, well, I might have to pay up to $5,000, but if I'm like banking on nothing happens to me unless it's really, really bad, my bills are probably going to be, tens of thousands of dollars. So what's $5,000? Otherwise, I'm healthy, nothing's going to happen. I don't pay anything. So doing a high deductible plan or a catastrophic plan just means like your deductible is really high. You're banking on the fact that you're super healthy. You could also do short-term insurance. So short-term insurance is 3 months to 364 days. Again, this used to be a bigger issue with when we had like that Affordable Care Act, the ACA Act that they were talking about. We still have that. You're still required to have health insurance, but there used to be a penalty for not having health insurance here in this country. So the Trump administration has done away with that. You no longer have to pay a fee if you don't have health insurance. So that's not as popular. You can also look to reduce costs for doctors or hospital visits. So you can look inside your network. So in that first video we watched, they talked about going in your network or going outside your network. There's certain doctors that use your insurance. And if you go see a doctor that doesn't use your insurance, then you're going out of your network. Usually when I look at plans, I love my doctor. I love, love, love her. So I always look to see like when my options are there of having to choose a new plan. First, I look to see if she's still in that network because I don't ever want to choose a network or an insurance plan that doesn't include her. That's how much I love her. You can shop around, you can make calls, you can ask people how much things cost. You can always be connected to someone to help you understand the financial aspects of health insurance, and all offices have somewhere for you to talk to because it is super complicated. And remember, I hope Ms. Stickles has talked about this, but if you ever get into a point where you can't pay a bill, you always call. Do not let them call you, because if they have to call you, they're mad. But if you call them and you say, hey, I can't pay this, can you help me? They're usually more than willing to help. So they can put you on a payment plan. I worked with a gal once who she didn't have insurance, and she was walking home one night in the winter and she slipped and fell and she cracked her head open on a sidewalk. And so she was in the hospital for like 4 days before she regained consciousness, and they could help find like even just someone who knew her. So her bills were like enormous. And I think it took her about 5 years to pay them off. And basically like she just, every time she got paid, a certain percentage of her check had to go to the hospital. So it was really crazy. And like I said, it was just winter Minnesota. She was just walking home after work and fell and hit her head on the sidewalk. You can also look into free clinics. So Planned Parenthood is a name that a lot of us know, and that's one of those free clinics. Otherwise, there's low cost clinics or sliding scale. So a sliding scale looks at your income usually, and then you pay based on that. Low cost clinics, they like just like they sound like, they do things at a lower cost for you. Okay, so that's the Insurance 101. Like I said, there's so much more that we can get into, but I try and just keep it super basic for you guys right now. So finding a health insurance plan. So a lot of times now, like these basic things about insurance. So you have a couple different options about how to get that insurance. So you can either usually get it through your employer, through the government, or through the state, or you can like qualify for Medicaid. So we'll go through that, and then you guys just have to kind of know some of those vocab words and then look at what you're comparing. So at the end of this, I'll tell you what I like look at, and then I usually just run a spreadsheet and I like kind of do like best case scenario, I'm super, super healthy this year, and worst case scenario, something happens to me or the family. So my sisters both call me when they have to do this because like I said, even though they are 30 some years old, it's super overwhelming and it's confusing. And so the more you know, the more power you have. So we want to understand how millions of Americans get their healthcare insurance. We want to be able to explain the pros and cons of opting into your employer health plan versus buying your own. We'll see very fast why you guys want to do employer health care plans usually. And then you always want to read the fine print, and so we'll figure out why on health benefits forms and shop around for a health insurance plan that works for you, and then determine what steps you can take if you're faced with an expensive medical bill. All right, so how do Americans get insurance? So what's the best way for me to do this? These questions are all in your guided notes, so make sure you jump over to that and you answer those questions. But this infographic is pretty cool, so let me just make it a little bit bigger here. So how do Americans get their health insurance? So each figure equals 1 million people. 21.8 million people are in a non-group. 4.3% or 4.3 million people have Medicare. So remember, Medicare and Medicaid are the two different federal insurance programs that we have. 156 million are employer-based, and then 29 million are uninsured. So that is from that 9 to 11% that are uninsured right now. And then 6.4 million have other public insurance somehow. You can see that the majority of people are employer-based. So we'll talk about what exactly that means as we go through these next slides. Employer health insurance versus individual plans. So this is the article that you can click on to read. I'm just going to go over a couple things and I'll let you guys really read it. It's a pretty easy read, and it just kind of really, I like that it has bullet points. So individual medical insurance plans. This means that you have a healthcare policy that you purchase for just yourself and your family. They're called personal health plans. So this means that you've like gone out and you have found your insurance plan. So when I worked for the nonprofit that I was working for when I took a break from education, I had to go out and get my own health insurance plan. And so this is like what it's talking about. Your employer-sponsored health insurance. This means that your employer is saying, hey, we can get you a really good deal because we're going to insure everybody in this company. And so here's 3 options, maybe 2 options, but they usually give you 2 to 3 options about what you can choose. And here's the basic information. But these ones are better, you guys, because they often are they're going to split the cost with you. So this is where it starts to make a big difference. And that salary, like remember at the beginning of the semester, I said sometimes your salary isn't always about like how much they're paying. This is because this could be another chunk of it. So here at the district, our district does pay a chunk of the health insurance every month. And so Kike and I actually opt to go with his company, his employer-sponsored health insurance. Because it just was a better option for us while we're having kids. But one not so great thing is even though the school says, hey, we'll pay for some of your health insurance, they don't give me that extra money because I'm not going through them. So just know that if you use that health insurance and they're paying half of your health insurance bills, like that's really awesome. That's like more. So if you're getting paid $100,000, like it probably equates to like $125,000 that they're really paying you because they're paying that portion. And then you also you get to contribute to some funds for medical bills that are pre-tax. So before the government takes tax out of it, you can put it in some healthcare accounts, which makes it really awesome. So this just kind of goes through and talks about the differences of them. So I'll let you guys really dive in and read that. Just know that usually employer-sponsored health insurance plans are going to be a lot better. And that's because they can offer this plan that goes out to that whole business. All right, let's see. So what is a healthcare marketplace? So a healthcare marketplace is just what it sounds like. I'm going to do this bigger so we can really see some of these slides. All right, healthcare marketplace are websites where qualified health insurance companies can display their health insurance products for customers in their service area. All the plans are listed out and organized in the same way, so you can easily compare them. The Federal Market Exchange is run by the federal government. State Marketplace Exchange is created by the states, and then a private exchange is created by companies such as Health Markets. So with the Affordable Care Act, the state could choose to participate in the federal marketplace, or the state could start their own. So here in Minnesota, our state decided to run their own, and that's what is called MNsure. So around the October timeframe, if you guys watch any of the network TV, you'll see a lot of ads start to talk about enrolling in MNsure if they need to. And then that is what we can shop for our marketplace. The federal one, if you need Medicaid, Medicare, that is federal run. All right, so open enrollment, just like what I said, open enrollment is this small window of time when you can jump into the marketplace. So insurance companies say you have to do this during a certain time frame. There are penalties to trying to get a health insurance plan if you don't come in on that time frame, and there's not a major life event. So usually major life events are things like having a baby, getting married, getting divorced, a loss of something or somebody, I should say. So those are major health or major changes that would allow you to then, I just had Leo, so we could add Leo to the plan. Interesting story about this. So my sister, when she got married, she carried their health insurance, and she was planning on adding her husband, Chris, to their health insurance. Well, she went on this amazing honeymoon, and so they were gone for a month, and they traveled through Africa. So even though you have this major life change, you only have a certain time frame within that life change to make a change to your insurance. So they went on this amazing honeymoon. She came back and she went to go add Chris to her insurance, and she couldn't. So they said, no, sorry, you have to do that within a month of it. And it was literally a month and 4 days. So that was in February. And then her open enrollment was in December. So she had to wait until the following December to insure him for the next year. So they are super strict about that. Here's our marketplace. So if you click on this, it'll take you to the MNsure website. And so you guys can definitely look and shop around or kind of look at stuff. The one thing that I was considering having you guys do for this week's assignment was to start comparing plans, but we're going to do something a little easier because I get it. This is a lot. So the healthcare marketplace is a service that helps people shop for and enroll in affordable health insurance. If you didn't enroll during open enrollment, you have no health insurance, you must qualify with that major life change. So marriage or birth of a baby, stuff like that. So there's another link to MNsure. Right now with what's going on because of COVID-19, there are going to be a lot of, I think, exceptions. So if insurance is something that you or your family are looking for and it's set up like that, make sure you kind of look at that stuff. All right. So what you do, sometimes you guys might get medical bills if you can't afford them. Then here's some things that you can do. If you click on this, it'll bring you to an article that really breaks down what you do a little bit more than what I summarize here. So, but like I always say, do not just ignore it. So a couple things, I'm also gonna just fix that while we're doing this. Make sure you look at the bill and make sure the charges are accurate. So when I just got the bill for me and Leo at the hospital, it just had some big numbers on it. I can call and say, can I have a item list of what those things are to make sure that everything that they're charging is real. I will say it's super important to look at this when you do get bills. So I had a filling filled last year, and I hate Novocaine, you guys. I really, really hate Novocaine, so I usually do it without. I'm crazy like that. I sweat a lot, but I hate Novocaine. So the dentist had charged me for Novocaine because I don't know, he's just used to running paperwork through, and most people don't do it without Novocaine. So I had to call and say, well, I didn't really get the Novocaine. And they're like, oh yeah, no worries. And they fixed it and they took it off. Otherwise I would have paid, even though it was just a fraction of the overall cost because we have dental insurance, I would have been stuck paying that. So always make sure the charges are accurate. Don't ignore your bills. Remember, always, always, always call and say, I can't afford this. Insurance, credit cards, student loans, whatever it is you call. Do not use credit cards to pay off your medical bills. A big reason for that is because usually the medical facility that you are working with is willing to work with you with a very low interest rate, if anything. And your credit cards probably have a much higher interest rate. So don't use credit cards to pay them off. Like I said, call the hospital or wherever it is and try to work out an interest-free payment plan. Most of them will because they just want their money. So when they don't, even if it takes a long time, getting a little bit by little bit from you is better than not getting anything. You can ask for a prompt pay discount. So I could have called the hospital up and I could have said, hey, I can't afford the $2,000 that I owe you right now. So if I pay this all in one shot, is there any way that you can give me a little bit of a discount? They usually will. You can ask for financial assistance. If need be, you can apply for a loan. I would usually contact like your bank or credit union in order to ask them for medical loans. And so those are usually a much lower interest rate if you have to take out a loan, a much lower interest rate to pay a medical bill than say to like get a car or something. And then if it does get sent to a collection agency, so if like you've ignored your bills and after a certain amount of time, the hospital will send it or the doctor will send it to the collection agency. So you do need to deal with them and call them. And then this article does talk about what collection agencies are allowed to do and what they're not allowed to do. So that's it for finding a health insurance plan. Your assignment is for this week is going to have to do with reading the fine print in a health benefits form. So I'll talk about that more on the assignment page, but just know that it comes from this section of the notes. Okay. So other types of insurance. Here we go. You guys, it's so exciting. Insurance is awesome. And if you're watching this, kudos to you. Live here in my basement, aka the new working zone, because that's Kike's workstation behind us. Another reason I have to do this at night is because otherwise you'd hear Luca running around upstairs or Leo crying or Kike talking to people. So, all right, our objectives for this one is that you're going to investigate insurance like renter insurance, long-term disability, and cell phone insurance, and to see if they're a worthwhile expense for you. We'll describe the cost and impact of a larger societal form of insurance like Social Security. Okay, here we go. Something to think about. When you guys get your first apartment, when you move out of your parents' house at some point, do you think you want to go and get renter's insurance? So why or why not? I know that this is in your guided notes, so make sure you answer that. And we're going to talk about why you would think about this. So I will be completely honest and say I never had renter's insurance, especially when I was in college, because when I moved out of my family's house, or my mom's house, I was like, I don't know what that is. And I don't think anyone ever explained it to me. But then I don't even know at what point I read something and I started thinking about how much money I had between like the TV, my clothes, some jewelry. And I was like, oh my God, that would be super expensive to have to replace all of that. And renter's insurance was like $5 a month when I first started. So I was like, okay, that makes sense. And so even now it's super inexpensive if you're renting. I think the last time we were renting, we had it for like $15 a month. Something super small. So again, you're putting money into that pool and you're risking like, will something ever happen? But the older you get and the more stuff you acquire, the least, it's not a chance that I wanted to take. All right, so this video is going to talk about Renters Insurance 101. And it says, though less than half of renters currently purchase renters insurance, the proportion that do purchase it is on the rise. So you might be wondering what renters insurance is and how it works. So that's what we're going to learn about. Another reason that it's probably on the rise too is because of how many people are renting. So we just are not seeing people buy in this market these days. All right, here we go. And then you got to be smart about renting.
Home is where the heart is, and maybe all of your stuff too. But if you're among the 1/3 of all U.S. households that rent, your stuff may not be protected should you suffer a fire or theft. While the landlord or owner of the building you live in likely carries insurance, that insurance only provides coverage for the building itself, not your personal property inside that building. Where would you get coverage for your furnishings, clothing, and electronics? The answer is renter's insurance. A renter's policy offers protection for your personal property at your place of residence or anywhere in the world against covered losses. Examples of some covered losses include lightning, wind or hail, and the previously mentioned fire and theft. Renter's insurance, like a homeowner's policy, has two sections: property coverage and liability coverage. The main difference between the two policies is the property coverage section under a renter's policy does not cover the building you live in or other structures on the property, only your personal belongings inside that building. This section of the policy also includes coverage for small alterations or additions you may have made to your rental at your own expense. A renter's policy also provides loss of use coverage for any additional living expenses you incur when you have lost the use of your home. For example, should you have to vacate your apartment due to a fire in the building, this coverage would pay for the additional cost of a hotel or other temporary living expenses you would not normally have until the damage to your apartment can be repaired. The second part of a renter's policy provides liability and medical payments coverages. Liability coverage protects you and your guests for unintended damage to your rental, or for an accident that occurs in your home. For example, if you were to leave the water running and flood your apartment, and maybe the one below, your liability coverage would pay for the damages, up to the policy's limit, of course. And should the tenant of that apartment below you choose to sue you for their damages, this coverage could also defend you against a lawsuit and help pay for the expenses associated with that lawsuit. Medical payments coverage pays for medical bills incurred by guests injured on your property. It also covers injury you caused to someone else while you're away from home. So, should a guest in your home fall and injure themselves, or if you poke someone in the eye with your umbrella while getting on the bus, your renter's policy would cover their medical expenses, as well as any legal fees incurred because of the incident. This coverage does not, however, cover your own medical bills if you are injured. Your health insurance would take effect in this situation. Additional liability coverages under a renter's policy include claims expenses, first aid expenses, damage to property of others, and loss assessment. While renter's insurance is an important coverage for anyone who rents their home, it's a common misconception that if a renter is still in college, their parents' homeowner's policy will cover their belongings if the unthinkable happens. While there may be limited coverage for this personal property, the truth is anyone who rents their residence, including college students, should have a renter's policy to protect their possessions in the event of a loss. If a disaster strikes, the cost of all of your belongings can add up quickly. Fortunately, renter's insurance is extremely affordable. Talk to your independent insurance agent today to learn more about how to protect your belongings with a low-cost renter's insurance policy.
All right, so that's just a little bit about what renter's insurance is and what it covers. How to get renter's insurance. So we'll watch this really quick and then we'll go through these. We'll just kind of review the 8 tips that they give.
Meet Jasmine. Jasmine is a state college junior about to move into her first apartment. Jasmine has watched our video, Renters Insurance 101, so she understands the importance of renter's insurance. However, she has no idea how to actually get it. What should she do? Well, her first step is simple. Shop around for the best renter's insurance plan. To do this, Jasmine can either go online and get quotes from insurers, contact a local insurance agent, or use our preferred website to get great renter's insurance. Then, now that Jasmine understands how renter's insurance works and how to get it, as long as she follows these 8 rules, she should be set for the future. Rule 1. Always opt for plans that reimburse the full replacement cost of an item, not just the cash value. That's because cash value factors in depreciation, so your insurer may only pay $500 for that refrigerator you paid $2,000 for 3 years ago. Rule 2. To save money, choose a renter's insurance plan with the highest deductible you are willing to pay. The higher the deductible, the lower your monthly premium. Rule 3. Before getting any renter's insurance plan, be sure to carefully read its fine print. Rule 4. Be sure to shop around for renter's insurance plans at least every 3 years. Depending on your circumstances, you may qualify for lower rates. Rule 5. After you get your policy, do a home inventory. This is simply a record of the cost of all items in your apartment, ideally with photographs attached to prove ownership. This list will prove invaluable, both in determining how much coverage you need to buy and in the event you need to file a claim. Rule 6. If you have expensive artwork, furs, or jewelry, all items generally not well covered by standard renter's insurance, consider paying a little extra to add them to your policy. Rule 7. If your property is damaged or stolen, don't delay. Call your insurer and file a claim as soon as possible. They'll likely reimburse you, even if the theft or damage took place outside of your apartment. Finally, Rule 8. If you have roommates, possibly avoid adding them to your insurance plan. That's because reimbursement checks are split equally amongst all policyholders, even if the destroyed property only belongs to one roommate. This is a nightmare scenario waiting to happen, especially if your roommate is short on cash. Congratulations, you have finished the Renter's Insurance Basics curriculum. If you want to see our free recommendations for great renter's insurance plans, or...
Okay, so the first time I had insurance, you guys, I just used I think the same person that my mom had for her house insurance and stuff. So, and then when I had to be kicked off of her car insurance, I just used that person, and then that person can give you all these different types of insurance. So the 8 tips that they went through, that full replacement cost and not cash value. So if I had a brand new TV in there and I paid $4,000 for that TV, but I paid that 4 years ago, replacement value might be replacement value would be oh, I paid $4,000 for that. They would give me the full $4,000 versus cash value of that TV 5 years later is maybe $500. So $4,000 versus $500. That's why you want to look at the difference. Choose the highest deductible you're willing to pay. So now remember that deductible is that amount you have to pay before the insurance kicks in and then gives you the rest of that money. So the higher the deductible, the lower the monthly premium. So if you want your monthly premium to be $5, your deductible might be $5,000. So you have to kind of think about it okay, if I lost all my stuff or somebody came in and robbed me, would I be comfortable paying $5,000? Or do I want a lower deductible? So maybe my deductible is only $200, but I have to pay then $20 a month. So you have to kind of decide what you want to do, and that might be based on what's in your apartment or what's in your house that you're renting. Make sure you read all the fine print, shop around every 3 years, do that home inventory. It sounds silly, but I will tell you, in the moment of something that's crazy that just happened, you're going to kind of forget some things. So it's just easier if you have stuff written down. Pay a little extra to cover those expensive items not included in your policy. So some people have an engagement ring that's super expensive. That might not be covered in your basic renter's insurance. You do want to put a little extra insurance on there so that if somebody stole your $10,000 engagement ring, that it would be covered. You want to file any claims as soon as possible, as soon as they happen. And then that said, avoid adding roommates. I never would. So you don't want to split money with them. You want all your money for you. All right, so that's renter's insurance. So again, most people don't know that exists or just ignore it, but I would highly recommend it. So long-term disability. So we'll watch this video, and then you guys, I believe you have to answer these questions in your guided notes.
Meet John. John has been working at Corporate Code's sunny LA office for the past 7 years. John loves his job and thinks he has everything he needs. everything from a well-funded 401k to great health insurance. However, John is actually missing one thing: long-term disability insurance, also called LTD insurance. John is stunned. What on earth is that? Well, like all insurance, LTD insurance reduces the costs associated with a risk, in this case the risk of a disability keeping you from working, in return for a monthly fee called a premium, which is based on everything from your age to your medical history. Sounds simple enough, right? So how does LTD insurance work exactly? Well, in a nutshell, think of it as income replacement. Should the worst happen and you find yourself unable to work due to an accident or illness, unlike health insurance, which only covers the medical bills, long-term disability insurance will give you the cash to compensate your lost work, generally between 40 to 65% of your salary tax-free. Pretty great, right? Well, maybe, but John is skeptical. After all, he's extremely healthy. What are the odds he'll suffer a long-term disability? As it turns out, surprisingly high. The Social Security Administration estimates 1 in 3 Americans entering the workforce today will suffer a disability of some sort, of which only 5% will be covered by workers' compensation, which, as it sounds, is an insurance plan that covers accidents or illnesses caused by your work. This makes sense, especially when you realize that 90% of long-term disabilities are caused by illnesses such as cancer, not accidents. This is where long-term disability insurance comes in. It covers almost every non-pre-existing disability and only costs around 1 to 4% of your annual income. This is really quite reasonable, especially considering that long-term disabilities last about 2.5 years on average and can be financially ruinous, even with adequate savings and a loving family to support you. Hopefully you and John now understand the basics of long-term disability insurance. Be sure to check out our next video, which teaches you how to actually get long-term disability insurance. And be sure to check.
All right, so the difference between health insurance and long-term disability insurance. So health insurance covers your bills. Long-term disability insurance will cover like your expenses or like getting a salary. 3 examples that you can think of when someone would have to rely on long-term disability insurance. So whether they get hurt but not on the job. So if they fell and they broke their leg, but like it's a super long recovery and they can't work because their job requires them to be on their feet all day, that might be a time that you could activate your long-term disability insurance. Getting cancer and not being able to work. And then fill in the blanks, long-term disability insurance costs about what percent of your income. So I think if it said 4 to 7, which is helpful because then it usually lasts about 2.5 years is the average amount. All right. I think that's about it for long-term disability. So there's lots of options when you get your job and you get this fancy packet of like, here's all the things. You can either opt to have long-term disability insurance or not. And it's completely a personal preference. I can tell you we do not have it. But now that we have kids, we should think about it. All right. Actually, I take that back. Kike has it. I don't. All right. Social Security, just the facts. So if you click on this link, it'll bring you to this article. The one thing I really like is this infographic of this napkin art. So this is talking about Social Security. So Social Security is a government-run program. It's for when you retire, you can get your Social Security. Also, if you're disabled, you can collect Social Security. And then if you're if you're dependent, so meaning like if your parents passed away before you turn 18, you can also collect their Social Security. So it's for the retired and the disabled. And then how it works is you contribute it through the taxes that you pay. So like right now, every time that I get a paycheck, it's getting dumped into the Social Security bucket. But it's being tallied how much I'm paying, because then how much I'm paying is what I can get out when I retire. But the money that I'm putting in right now is going to like my dad because he's retired. So my money is being instantly used, but it's also being clocked of like how much is available to me when I get to that point. Interesting fact, prisoners can't receive benefits if they're in prison. So this article goes through, there's a really nice video here about what is Social Security, who's eligible. So you can, once you are at the age of 62, you can start to take Social Security, but you don't have to. So remember, it depends on how much I've contributed over all of my years of work. And it does max out at a certain number. But then, if I'm like 62 and I'm like, well, I don't want to start taking it yet because I'm still working, then I can wait until I'm done working. And let's say I'm 70 something by the time I start to take it out, then it goes and it looks at how much money I contributed and it recalculates that. So the longer I wait, the more I would get each month. Things that are good to know, what it is and isn't. And then here's some like fun facts about Social Security. So Social Security was signed into law by Franklin D. Roosevelt in 1935 as part of the New Deal. It was a package of programs that was designed to help pull the U.S. out of the Great Depression and create a better system of economic safety nets for the country. So super interesting as we go into whatever this is going to be deemed and we see this social or the economic impact, it'll kind of like, I think it'll make us and force us to really consider things like Social Security and what systems we have in place to help people. All right, key takeaways. Social Security is a taxpayer fund program that pays monthly benefits to the elderly, the disabled, and some survivors and dependents. So remember, you have to have paid in order to get some money out. What you pay into Social Security doesn't go into just like your account. So what I'm putting in today doesn't like sit in Abby Lugo's account. Like what I put in today is being tracked because that's what I'm eligible to take out, but it's going to people like my dad who are already retired. The longer you wait, the more your monthly benefit would be. And Social Security might be one important piece of your income retirement, but it probably won't be enough for your sole source of income. So that's what it was created for, was that it could be your sole source of income, but it is not enough. So like I said, my dad is retired and Social Security is just like a tiny fraction of what he actually needs. So, and he didn't do a good job saving for retirement. So they live like paycheck to paycheck of between my dad's Social Security, my stepmom's pension and Social Security, and then they, like try to do a little things here on the side to get some extra income for themselves. So when we talk about Social Security, like I am kind of skeptical that I'll be able to get all the money that I put in when I get to that point of retirement. And I think for you guys, you really have to question, like, there's no question about it. You guys will pay into it, but will that be available to you when you go to retire? And will that be enough? So that's why when we talked about investing and how important it is to have those retirement accounts and stuff, it is so important that you guys save your own money because we can't rely just on Social Security. All right. So that is, we've talked about renter's insurance, long-term disability, and a little bit about Social Security. So now here's like another type of insurance, cell phone insurance. So I know that this might be kind of more relevant to you guys because most of you have a cell phone. So it would be interesting for you to find out if you are carrying insurance on that cell phone and then what that insurance covers. So you should ask your parent or whoever holds your cell phone insurance policy what they think. The cost of the Galaxy S9 Plus or an iPhone 10 ranges from $840 to $1,100, which is cray-cray. But you can buy insurance or an extended care plan. So if you click this article here, it'll explain and break down those vocab words. Here's some really interesting costs about cell phone repair. And then I have to look because you guys, this stat is insane. Americans spent $3 billion to fix broken screens in 2017. $3 billion. That's insane. So something to think about. But I want you guys, again, here in your guided notes, we're talking about things like the words deductible, premium, extended warranty. So just doing a vocab check to make sure we understand those words. All right. And then that is it for notes this week. The other thing is this financial impact of insurance. There's this really cool assignment, but it's really lengthy, and I don't think we should do it. So, but if you really, really wanted to, here's what it's about, and then you can click on it, make a copy, and do all that stuff. So please let me know what questions you have about insurance. There's still so much out there, and I love talking about this because the more I talk about it, I feel like the smarter I get about it. Ask me questions, and especially given what's going on right now, ask. Office hours 10 to 12 every day. You can call me. You can type to me. You can write me an email. You can talk to me over Schoology. We can do a Google Hangout, whatever, because I would love to see you guys anyways. So let me know questions, any issues you have, and we will see you later. Bye, guys.